Well, about half the forecasters had predicted no change to interest rates, so today's rate cut was half a surprise, and the dollar adjusted by half a cent. The share market was well into its first reversal since November the 25th, and amusingly at 2:30, when the cash rate was cut by 1/4%, it twitched by 1/3 of 1%, mainly because BHP and Rio both suddenly spiked by 1% each. Can't imagine why they did that. No doubt some arcane high-frequency trading thing. Anyway, the market ended 1.5% lower on the day, with the big resources stocks losing about 2%, except for gold miner Newcrest, which was down 4%. The banks mostly fell less than 1% each. Sometimes the market just falls because it's been rising for a while. Wall Street and the European markets were still optimistic about the talks between Angela Merkel and Nicolas Sarkozy that started last night. But by the time the sun travelled around to Asia, investors were looking to take some profits because talks are cheap. And here's where the Australian dollar was trading a short time ago, still down about half a cent on where it was this time last night. Today's economic news was the current account deficit for the third quarter, down to 5.6 billion, which means the national foreign debt is still climbing, although at least it's not sovereign debt. It's ours, via the banks rather than via the government. And the reason is that we've been running current account deficits for the best part of 40 years. And even then, in the early 70s, it was only a brief period of surplus thanks to Japan, following a decade of deficits in the 60s. At least China has got it to the lowest minus number for a while. And that's finance.